What's going on, YouTube? Today we didn't take any trades, but that don't matter. We're still gonna make a video, go over the market and what happened today. As you guys know, today, Wednesday, February 12th, Daddy Trump was speaking and CPI came out. So today I was very, very hesitant on taking anything. I also had classes during New York morning session, so bullshit. Like, dude, I'm literally in class from 9 to 11:05. That's literally the whole session. What are you gonna do, bro? What are you gonna do? But this morning, 8:30 CPI comes out, and we get this huge displacing bearish candle at 8:30. And important to note, we have equal highs right here on MES, and then MNQ. Let's see if we get any SMT. We see a lower high, not an equal high. So we know that this and this are both low resistance liquidity. We also see a trend line forming here, which is another form of liquidity. So we got that, and we got this as both draws on liquidity, right? And people, you can say like, oh, this huge bearish candle, like we've got to be bearish. Dude, use your brain, bro. Do you really think after a 1.27% move in 30 minutes, you really think price is going to keep on going down? Going down for what? Like, price is not just going to go down to go down because of news. News wasn't that bad. Like, we're not... I found it very, very unrealistic for price to go from here all the way down 4% in a day. This is not, you know what I mean? Not what I think. Usually when we see something like this, like a huge move down, what do you see happen? A move back up to fill that imbalance. Same thing happened here, not even like a couple days ago. Huge move down, what do? We come back up. Same thing here, boys. Huge move down, we move back up. That's just how the market moves. So we see this big candle down. So my bias going into today is come back and retrace into this candle. Now obviously price is in a premium now of this range, but that's irrelevant because my draw on liquidity are these highs. If this high came and swept, where's this tool, bro? What's it called? Path. If this high came and swept this high and then broke structure, I'd be more reluctant on longing into this area. But like, yeah, this is an imbalance, but my bias is still to fill this imbalance, mitigate this order block too. Right here on an MNQ, it's a little more obvious. We can come here on the hourly, and my goal was to mitigate this order block on the hourly, and we come and do that. And then MES, same thing. We still haven't hit it yet. That's even more of a confluence that we're going into it. So these are our draws. This order block level, and take this out. So this is an hour order block. We come, barely tap it. We see an obvious reaction. So you could have even been planning for shorts over here or wait. So there's two things you could do in this situation, right? You could have waited. Obviously, this is out of my trading time, but this is two options. You could have waited for price to come in, hit this order block, and see if you get a reaction, take shorts. Or you can wait and see if price doesn't make a reaction, then long into these highs, and then wait for a reaction. Those are two possible opportunities. And the one that looks like it's playing out is this one right here, where we come in, we react off this order block and start retracing, and we broke structure on the 15-minute. So low-key, shorts look the best from my opinion right now. We inverse this for value gap as well, but this is all out of my zone, so whatever. So let's go back today and see what trades we could have taken. So we see price sells off hard, we start retracing up. So when I have a clear direction, my plan is basically figure out where I can get in to catch continuation. So we see a big 5-minute impulse up and then have a quick retrace. What do we retrace into? We retrace into a discount level / imbalance. So you see, this is a 5-minute imbalance. We come into, we fill it, and then what do, boys? We come into this imbalance, and there you go. We break structure on the 1-minute with a displacing candle, with a candle that creates a fair value gap. You enter off that candle, put the low wherever you really want. I just put it at the low of the, what's it called? At the low of this imbalance. So you could have put it here for a real nice risk to reward. You could put it here so you have a little bit more room. That's what I wanted. I wanted around a 5-6 pip or tick stop. And then we come here and we target this high for an easy 1 to 7. Then same thing happens. If you guys see what I'm doing, is you're basically aligning the time frame. So right now, 5-minute is bullish, obviously. Look at this order flow. We're respecting down close candles. We're respecting fair value gaps. So we expect this trend to continue, right? And what happens again? We can erase this now. Boom, 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 boom. And what happens again? We create another 5-minute imbalance. We fill that. And what do? We come into this discount level of this range. We come in, fill this imbalance. We sweep this low right here. We break structure on the 1-minute, and we inverse these 1-minute for value gaps. Boom. Enter off the inverse. Set your stop at the bottom of the inverse candle, or you can even put it at the bottom of this down close candle. For 2 to 8 risk to reward, target these range highs. You can take profits along the way. You can trim off half your position at either one of these highs. Probably this high, honestly. This looks good. So trim off half your position there, leave 25% for here, and target this high, this order block, as this final take profit. And there you go. What is that? A 1 to 4.6. Like, dude, the money is there. The money is there, dude. It's just a matter of executing and trusting your intuition and edge. If you think you know how to read the market, then put money on the line. You have to get used to like forming biases and forming opinions and trade ideas and putting actual risk on the table. Because if you lack the confidence, you're not going to take these trades, even though you can spot them in hindsight. It's very important to not only practice the hindsight trades, like what I'm doing, but also putting money on the line. And usually I'm good with that. But today, there was just way too much news. If we look today, President Trump, Daddy Trump speaking, CPI yearly, CPI monthly. Like, I just think that price action is very inconsistent when we're looking at red news days like this. But all in all, if you guys did trade today, hope you guys made some money, didn't blow up your accounts. And that'll do it. I'll see you guys in the next one, probably tomorrow.